people coming in. So I will kick us off. Hey, everybody, welcome to the Data Economics Festival hosted by the Data Economics Company. I'm Jennifer Hinkle. Today, we're going to be talking about evolving regulatory frameworks for digital assets and data assets. If you're just tuning in to this session as the first in the festival, you can find out more at lydion.com, lydion.com/festival. And we have across the week, we have more than 20 content sessions. We also have some fun happy hour sessions. I know Pat and James will be probably tuning in for the sing-along, if not the golf clinic and the mixology class, which actually Nancy, who's here, will be leading us through some cocktails. So we have a really fun week ahead, a lot of great content. And I'm excited to get into this one. We're going to talk about some of the hot topics in regulatory and compliance and finance world when it comes to digital assets and data assets. So with that, to kick things off, I'm going to go around and just give everybody a few minutes to tell us who they are, what organization they're with, and what they think are the most pressing issues in this space. So James, if you don't mind, I'll start with you. Can you please introduce yourself and tell us a little bit about what brings you here today?
Thanks, Jennifer. So really excited to be here today talking as part of the Data Economics Festival. I think this is a tremendously exciting space, one where the world is evolving rapidly. You've got a lot of participation from people who maybe were turned off from traditional financial services in the past and are seeing this as a more exciting way of getting involved in investing and trading and funding the economy. So yeah, I think it's an exciting space. That said, it's a space that doesn't have very many rules at the moment. Parts of this are a little bit Wild West. And so, it's for me and Pat and other regulatory professionals, it's an exciting time to sort of see and shape how that regulatory framework is going to evolve to help these digital and data assets become more part of the mainstream. Just a bit of personal background. So I lead Braithwaite. We are a boutique advisory firm. We help financial services firms and firms who want to be financial services firms to get regulated, set up their compliance frameworks and make sure they're operating in compliance with the rules. So this is a really interesting space for a number of our clients because of the level of evolution and the lack of clarity we have at the moment. And I think we'll talk a little bit about where we see that going.
Yep. And James, if I could ask you one follow-on question, I think for our viewers, they will pick up that it sounds like you are from the UK. I know you've worked in both UK and US markets. I mean, is there a quick bottom line on what are the big differences in the regulatory paradigms looking at this space between the US and the UK, especially with, UK having just gone through Brexit, all of those things?
Yeah, so you're right to pick up on Brexit as a bit of a dynamic in the UK. I think the UK has a great opportunity to sort of recast its regulatory framework. It was really interesting to see the Chancellor today, who leads the Treasury, talking about introducing Bitcoin. So they've kicked off a new pilot study about a central bank digital currency with a catchy little moniker there. I wonder if you can guess what that's ripping off. But yeah, no, I think it's an interesting time for the UK. There was a consultation that came out in January from the Treasury around this sort of start of a regulatory framework, very focused initially on stable coins, which is where I think there's a lot of unease in sort of the policy community about what the impact of some of these stablecoin initiatives could be in terms of sort of monetary stability. Contrasted with the US, I mean, Pat will be able to add more to this, but I think the big debate in the US is simply what is a security and what isn't. And it would be great, with Gary Gensler now appointed to the SEC to get a bit more clarity on that over the next few months and years.
All right, sounds good. Thank you so much, James. So with that, I'm going to move to Pat. Actually, just before we started, I was asking his opinion of this new leader for the SEC. So Pat, why don't you start by introducing yourself and telling us a bit about your background and what brings you here today? And then it would be fantastic to hear a few words from you on just the update on the US and what some of these new people coming into roles will mean for digital asset regulation here.
Super, not a problem. So my name is Pat McCarty, and I'm the head of McCarty Financial, boutique consulting financial services firm here in Washington. I'm a lawyer, I'm a law professor, and a lobbyist. So I kind of run across a whole bunch of different things in the financial services sector. I was the general counsel at the CFTC back in the early 2000s, and I worked for the SEC chairman in 2009. Gary Gensler was the chairman of the CFTC during the Dodd-Frank years, and got to know Gary pretty well. He's a very, very bright man, and he's somebody who gets things done. And I would say that the people in the swaps world would agree with that completely. And I think Gary is going to probably try to sort of provide a clear line on which digital assets are securities and which ones are not. I think he's going to have a view that he needs to do most of the mainline securities work, and this digital asset security issue is basically sort of confusing a lot of people. So he's going to want to, I think, move quickly to come up with a clear definition so that everybody knows what's in the SEC's bailiwick and what's over in the CFTC's as a commodity. And I would just point out that both Bitcoin and Ether, the two largest digital assets by market cap, are not securities. In the United States, they're considered to be commodities. And CFTC has permitted futures and swaps to be traded on Bitcoin and Ether for years now. And I think the thing is that it may be the case that most of the digital assets that we're talking about these days are going to end up being in the CFTC's realm. So that would be a very quick way of kind of looking at that. By the way, I also, when I said I'm a law professor, I teach over at Georgetown University Law Center, as well as Catholic U Law School. And I'm teaching a crypto class at both. I teach a class on derivatives as well. So I spend time staying up to date and having very smart students ask me really tough questions. So it keeps me on top of things, just like you, Jen.
Oh, thanks, Pat. Hey, Pat, do your students ask you anything about Dogecoin?
Not yet.
So
I had one who actually owned NEM, which is a privacy coin, and pardon me, Monero. And she was telling me, geez, are there problems with that? And I said, well, yeah, I think the IRS has actually put out a contract on you because they're actually getting somebody who can break the privacy protocol that they have, Monero had. And I said, you might want to sell it, but it's up to you. I'm not giving you investment advice, but the thing is, privacy coins are a big deal for the IRS and everybody else. So it's just a very interesting thing.
Yeah, one of my friends was an engineer on Monero, so I don't know if it's public information what his name is, so I won't say. But James, please go ahead.
I was going to say, with it being tax season here in the US, you're going to have a lot of people who, for the first time, perhaps are having to assess, do I declare my crypto holdings? Do I declare my trading? And I think that, that brings me on to a point I wanted to raise. Although these assets are really exciting and people are doing really cool things with them, and we're seeing some new market dynamics, there are some dynamics that just really aren't changing, and tax being one of them, and anti-money laundering, countering terrorist financing rules being another. I think that there are some in the industry who, thought that that maybe we'd see a new regime, a sort of bespoke regime in place for digital assets. I don't think that's going to be the case. You look at the proposals coming out of the FATF. You look at the overall tone from the Biden administration, which is strikingly similar to what we saw before. I think you can see that governments think it's important to make sure that money laundering isn't taking place, that taxes are paid, and that we're not using the financial system to aid and abet people who have sort of nefarious motives. So, I think there are some constants across any asset. And I think there are some more interesting bits of innovation going on in this sector where we can see the sort of the regulatory framework evolve. But as Pat was saying, we need that. We need some clarity on where the line is drawn around what's a security, and then for those which are not securities, if they end up being commodities, what does the regulatory regime look like for them?
Yep. Absolutely. So James, I'm just going to pause here for a second. Nancy didn't get a chance to introduce herself yet. So Nancy, could you please just tell us who you are? I know you're a CFO, you're a CPA, a little bit of a different space in the financial sector, but what kinds of things maybe keep you up at night when you're thinking about companies that you have to do accounting for, how they're treating these different assets that they might hold? We were just talking about how Elon Musk accepting Bitcoin now for Teslas. They've got to put that on their books somehow when the revenue comes in, and then Bitcoin could be worth something totally different the next day. So I would love to hear your thoughts a little bit in a brief intro about you.
Sure. So yes, data economics, CFO, and CPA. So I'm very much attached to understanding how things need to be presented on the financial statements. And I will tell you that by accepting Bitcoin, Tesla is going to make an absolute nightmare for their accountants and their auditors. I agree with James. Basically, there are constants across all assets. And just touching on what he earlier said, UK versus US. So US is using US GAAP. Generally, IFRS is used abroad. And I know a couple of UK companies that are on IFRS, so that's the International Standards of Accounting versus the US Standards of Accounting. In the US, the standards of accounting are generated by the FASB, Financial Accounting Standards Board. It's a very long, interactive process of back and forth. When a rule is starting to be drafted, then it goes out to the Big Four. There's a large comment period and engagement with different accounting firms. Then they wheedle it down to the final US rule, and then they implement it. But right now, because there is a different system of US GAAP in the US to the IFRS abroad, you don't really have comparability in financial statements. So there's a convergence that is going on, and is going to take a very long time to complete. But the idea is that worldwide we'll end up on the same standard. So circling back to this asset class, and there is a distinction between data assets and digital assets. So we'll break that down probably further today. But the idea is we need to be able to have some technical accounting guidance in order to be able to put data assets on the balance sheet. Any CFO would love to be able to affect their ratios and have access to liquidity, which is what would happen in that event. And why is a data asset not treated like any other manufacturing asset where it can appreciate? But the US GAAP is very slow and hard to get any kind of regulatory rules established within less than a decade. Sometimes it's very complicated. And so I think that there could be a creative way to work within the IFRS structure, because generally that's more principles based and it's a lot more interpretive and open. And so we could potentially go that route to be able to establish rules around this and able to put them on our balance sheets where they belong, just like any other manufactured asset.
Thanks, Nancy. That's fantastic perspective. And I think, zooming out a little bit on what you said, and in some of the agencies or organizations involved in helping to set all of these standards. So Pat, Nancy, James, when we look worldwide, I mean, who's the leader in all of this? Is it going to be the US coming from the SEC and the CFTC? Are we going to see other countries kind of developing regulations and standards at the same time, and all of those competing? James, I know in an email to me, you had mentioned China and what's happening there. We know that there's just a ton of Bitcoin mining happening in China, much more so than in the US because of energy prices, essentially, and what people are able to do in terms of just having cheaper mining costs. Are we going to be seeing kind of several competing standards and regimes that folks will have to figure out how to comply with all of them, or will they compete against each other and one framework will win out eventually? What do you think?
I'm skeptical about the emergence of a genuinely global regime. I think if you look at where the world is right now, I think we're somewhat post the 90s heyday of global international cooperation. So yeah, I think we will end up seeing blocks with blocks which have their own rules. And I think the crypto and digital asset space will end up needing to sort of recognize the territorial jurisdiction of different governments and comply with those rules. I think we will end up with a strong alignment between the sort of the Western European and US countries. Europe put out a proposal, the EU put out a proposal last fall for a markets and crypto assets regulation. That's going through the sort of consultation and refinement process. I expect a revised version of that to come out in the not too distant future. I think that revised version will probably be somewhat different to what came out sort of 6 months ago now. China, I don't know, Pat, what do you think?
I agree with what you just said. I don't think that there's going to be everybody comes together, sings Kumbaya, and establishes a global thing. I think there are going to be a bunch of different options that are informed by what other countries are doing. But I mean, I'd like to get back to the issue of that was made basically. I think digital data assets are going to be looked at differently than digital assets. I think there's going to be a very different kind of approach to it. I mean, today we already have major companies which sell data. And so data assets, which, sort of people discovering what's on their balance sheet and being able to actually count it towards what their, market cap is going to be something which is a big increase, I think, in that. But I think we're going to look at data assets much differently than digital assets, because there's actually something backing that data asset. And secondly, because I think the thing is that there's no incentive. There's already people who are packaging and selling data all over the place. And so I think the thing is that they've not chosen to go the route of the digital asset and run into that problem. So I believe that you're going to see people following more of the, I guess, not incredibly well, sort of blazed path, but there is a path already for selling data, like financial trading data. Bloomberg is making billions of dollars on this. Thomson Reuters is making billions of dollars. Refinitiv. Then you also look at medical data. And obviously you've got privacy issues that you need to start talking to people about. But you can exclude some of those personal identifying things, and it's still very valuable information. And you've also seen people selling patents. There is an active market for selling patents that people already have today. So I think I can see the future for data assets being very different from the problems that you see with digital assets. And I think that it'll be much more sort of like people will be like, well, this makes all the sense in the world, that people should be able to sell the data. Companies, can account for them on their balance sheet. And consumers can actually start to contract with companies to provide data to them when they're compensated for it. I think they're all things that are going to happen, but you're going to be worried about privacy, and you're going to be worried about some of the major companies like Google and others.
Yep.
Bring up all that data.
I mean, Pat, we had a speaker in a panel earlier this morning that they're doing exactly that at their company, where they are compensating folks. Actually, interestingly, they're compensating folks with cryptocurrency for sharing their genomic data for research. So that's a blend of a data asset's going one way, a digital asset is going back the other way. And it's interesting. I mean, James, we've had these conversations about some of the digital assets out there. What is really backing them? Is there much backing them? I don't know if you want to chime in. It's a provocative question.
It is. I mean, I think a lot of what is backing them is sort of faith and belief that they represent the future. And you could ask the same about gold. And I think a lot of digital assets will end up being a sort of an alternative investment class for people who might otherwise have invested in gold or other commodities, where you could also ask what is backing them. Gold is shiny, you can make it into rings and things, but you can't do very much with it, and you can't do very much with a Bitcoin. But if everyone believes in it, then that is sufficient to make it an investable asset. So yeah, I used to be more skeptical than I am now. I think people have a lot of belief, and these assets have endured. So yeah, I think if people want to see them as investable assets, then that's great, and we should make sure that there are rules around, say, money laundering, CTF, etc., and we've got fair and orderly markets. And I think you look at some of these assets and some of the market movements, and there are some questions about whether the markets are always fair and orderly, and there's some questions about what we should be doing to promote the effectiveness and sort of safety of those markets.
Yeah, I mean, that's a great segue to something that I've been thinking about asking all of you, which is if we take the standpoint or the point of view that retail investors need to be a little bit, maybe, I don't know if the right word is protected or insulated or at least educated about these markets. I mean, this stuff is all pretty new. I think, a lot of the education that people are getting about kind of, at least in the crypto digital asset space, is coming from places like Twitter or Reddit, not necessarily the most vetted sources. I think on the other hand, when you talk about enterprise, kind of the Bloomberg example, enterprises that are making millions of dollars or billions of dollars in some cases off of data, and how they might be shifting towards more of a data asset view. I also think about consumer protection in that regard. Right now, I don't think we have very good, at least in the US, consumer protections for how your data is maybe taken and monetized by other companies. So as I think of this space, I mean, the questions that are emerging in my mind are really around, it is a bit of a Wild West. How do we better educate the consumers, the retail investors, about what they're doing now, what they're trading now, and then maybe what's to come? And even James, that tax example you gave was great. I think there are a lot of people out there that don't realize they might have to pay taxes if they sell that Dogecoin.
Yeah, if you look at your tax form this year, there's a pretty big box at the top of it that reminds you. Yeah, it's an interesting one, isn't it? To what extent should we coddle investors and protect them from themselves? I think there's a broader philosophical point there, because you've got exactly the same dynamics going on in the traditional finance world. The rise of GameStop and other stonks, as they've been called recently, I think it's been really interesting. It does raise some interesting questions. I don't think we're in a world where, I don't think we want to go back to a world where most of the financial markets were, retail investors were excluded from them, and we had a tremendous amount of intermediation. But at the same time, clearly we do need a bit more education. And Pat, you're in the business of education.
James, one thing it's interesting is the coddling of the retail U.S. investor is something that politicians will defend to the death. But it's interesting. Over 36 million Americans own crypto, and a lot of it is actually owned by retail investors. And they may actually no longer be retail investors because they bought Bitcoin. So, I mean, maybe they bought it at $10 or whatever. But the point would be is that, there will be, that is one of the biggest drivers, I think, for potential legislative action under the Biden administration here in the United States, is that there are so many Americans who own crypto. I don't know what it's like in the UK or other countries, but that's a lot of people who own crypto, 10% of the population. I mean, it's absolutely shocked me when I read it. But that's a big deal. But the other thing on the privacy side of the equation for data, there's going to be, I think, I agree with you, Jen, that in fact, the U.S. rules are not all that great on the privacy side of it. I think that there's going to be a lot of people who start talking about, if data assets are really going to be sold and they have things like pharmaceutical information or test information related to people, there are going to have to be ironclad restrictions on private, people's, identities. So I think that it's going to be a very big issue here in the United States as things start to move forward. And I think the regulators are ready for that. And, they would probably be receptive to doing some of this in terms of permitting a market for data assets to develop if there are certain, privacy restrictions that are met. And I think people want to probably do that. So I'm feeling very positive about it, quite frankly.
Sure thing. I mean, Nancy, any thoughts on this topic?
Yes, so circling back to what Pat said earlier about patents, for example, that's a very easy thing for an accountant to put that on the balance sheet because consideration is given. You pay for that. And it goes on your balance sheet as an asset. Why? Because it doesn't seem to be viewed as a consumable. It's more viewed as a long-term investment. What is unfair is if a company pays for data assets, purchasing data, that is expensed because it's considered to be, fluid operational cost. So this is where we need to have some corrective work with IFRS or US GAAP so that we can be more consistent with the treatment of something and recognize its long-term value as opposed to its, one-time cost to the company.
Thanks, Nancy. Hey guys, I have a couple of questions coming in from the field. If you don't mind, I know we only have about 5 minutes left, but let's try to hit a couple of these. Obviously, this is a hot topic because folks have more things they want to know. So I think this first one is for James. Isn't it problematic if investment vehicles that are accessible to the general public are not backed by anything other than, quote, belief in the future? Doesn't that translate into really belief in whoever is mining and or maintaining these crypto or blockchain networks, which we know might not really be as decentralized as some people think, given that a lot of Bitcoin and Ether is controlled by a handful of individuals, and a lot of the concerns around mining and servers in Russia, China, other places where, maybe not favorable regimes, et cetera?
Yeah, so I think they're all valid concerns. I don't think that they're necessarily unique to the crypto and digital asset world. I think these concerns exist in the traditional world of finance. And I think by and large, you've got rules and controls in place, or at least we have a framework of laws that enable rules and controls to be put in place to manage this. And I think this is where we see the regulators now pedaling hard to update regulations to sort of take account of the technological differences for digital assets. If you look at the recent SEC exam guidance on digital assets, there's some really interesting thinking going on there about the risks that are specific to digital assets. So I think valid concerns, and perhaps there are some examples where there are some egregious breaches of the law, and there should be enforcement against that. But I don't think we necessarily need new laws for this.
Yeah, and you're absolutely right, James. But there's also the SEC has not permitted or approved a Bitcoin ETF, but it's permitted Grayscale Bitcoin Trust to register the securities. They've done that for not only the Bitcoin Trust, but also the Ether Trust. So they're registered securities. And I'm kind of wondering, it's like, so how can you permit one to register and not the other? And it just seems kind of like, once the precedent has been set, you're going to let people do it. I mean, does it feel like a little bit like the tulip bulb frenzy is going on here? I would say, and I'm waiting for somebody like Alan Greenspan to say there's some irrational exuberance in the market. But I think most people realize that. I mean, a year ago, the market cap for the digital asset market was $267 billion. Today, it's $2.2 trillion. I mean, it's rocketed up. And someone would say, like, well, guys, that seems pretty quick. I don't know. I mean, I'm a little frustrated with what's going on. I mean, you see the Canadians approving, Bitcoin ETFs and the Ether ETF and things like that. Has the FCA approved a Bitcoin trust?
They haven't yet, no.
I mean, but people can access these and buy them on regulated exchanges in, countries which we consider to be very well regulated. I just don't understand how it can be okay in one and not in the other. It just seems somewhat, and plus it's like, well, why did you not let the ETF if you're going to let these other guys register? It just, I'm scratching my head. I don't know what to do on that.
I don't know, James, do you have the answer?
I don't.
Pat, I think that's a great question. Another question from our audience, not super directly related to this, but I think in the same vein of how quickly are we going to see regulatory changes and how quickly will we see standardization? I mean, will we also see any quick additional regulation or laws around things that will limit money laundering, limit tax evasion? I know this has been a hot topic now as the NFT kind of space and the fine art world start to come together a little bit, which that's always been an avenue for moving money around without a lot of regulatory oversight. I mean, do you see things, are we closing loopholes or are we creating new opportunities for nefarious activity with these instruments?
Yeah, the thing is that, well, one, the Biden administration is very similar to the Trump administration. James said that earlier in terms of looking at the digital asset space. I think that the U.S. Treasury has moved the disclosure regarding whether you owned any digital assets during the course of the year to the front page, right underneath the information on your, you know, where you live and what your social security number is. So they're very serious about this issue because they want to collect tax revenue. And I think
Sure.
that shows you that in fact they're less likely to basically open the door here as opposed to, I think they're going to regulate it. I think it's going to be very much, I mean, the FATF and money laundering and law enforcement people seem to be ruling the day. They did that under Trump, and I think they're doing that as well under Biden so far. And I think the thing is that there's going to be this, like, the good news, bad news. Your Bitcoin went up by, 15 times. The bad news is you get a tax bill for X. But the Biden administration needs that money for infrastructure and whatever else. So I think the thing is that taxes are not going to go down anytime soon. And I think that you're going to see digital assets being put front and center because the money has gone way up. So I think that that's something that you're going to see. And on data assets, which I don't think are going to be treated in the same grouping, as I said earlier, I think that there's going to be, they have a better path, an easier path. I think it's going to be one of these things where, we're packaging services related to data and we have new products and things like that. The exchanges do that all the time. It's kind of like, okay, this is something which it's just a variation on a theme. So I think the pathway for data assets and putting them into ETFs and packaging income streams and things like that is going to be a simpler endeavor, because I don't think that people offering these products are going to try to get out of regulation. I think they're going to try to figure out how it fits in and move on and basically not end up having debates like Ripple is having with the SEC or anybody else in terms of, like, is it a security or not? I don't think that that's going to be the case with data assets as we move forward. I hope not.
Well, thanks, Pat. That is, I see we're about out of time. That's an optimistic and very thoughtful note to end on. So I appreciate that. I just want to thank all of you for joining into this session today. For those who missed it live, we'll be recording to broadcast it again later. But this was a fantastic conversation. I feel like I could host a podcast with you guys and we could chat about this every week if we had time. There's certainly no lack of things to cover. So really appreciate your time today, Pat, Nancy, James. Hope you have a wonderful rest of your day. And to the audience, hope you join us for some more sessions at the Data Economics Festival.